Welcome back, everybody. Today we're talking about earnings and specifically Nvidia's earnings. So obviously nothing else in the world matters. Better put your baby down for a nap, take your dog outside because Jensen Huang is cooking. Okay, so I'm kidding. I mean, kind of, but Nvidia earnings are one of the most talked about things in the market pretty much every quarter, so they draw a lot of attention. In this video, we're going to break down Nvidia's Q3 earnings as well as Cloudflare's recent earnings, which we haven't talked about yet, and discuss how both companies in my portfolio are looking based on my own expectations. So when we talk about earnings, you guys know I like to take a look at the outlook that they gave us in the previous quarter to see kind of what they expected. Now, in Q2, they gave us Q3 guidance of revenue of $32.5 billion plus or minus 2%, and GAAP gross margins expected to be about 74.4%. So if we take a look at what they actually announced yesterday, we can see that revenue was $35 billion and gross margins were 74.6%. And they had diluted earnings per share of 78 cents a share. And if we just take a quick look, you can see revenue was up 94% year over year, still up 17% quarter over quarter. And I just want to bring this up. Like, people keep talking about Nvidia like, oh, they're slowing down, they're decelerating. I mean, we are literally talking about the biggest company in the market by market cap, and they're growing at 94% year over year revenue. I mean, we're still talking about their quarter over quarter growth. That's just insane for the biggest company in the market. I just hope that we're putting this in perspective. And if we look at diluted earnings per share, it's up over 100% year over year, which is just amazing. And compared to what the market expected, Nvidia beat on earnings per share and revenue both. Now, in terms of the market reaction, right now, Nvidia is down about 80 basis points on the day. I think after hours yesterday, it was down at one point, maybe close to 5%, and it kind of inched up. But it's trading, a little down today, closer to flat. And at the end of the day, look, Nvidia is one of those stocks where the immediate earnings reaction isn't always what the market really thinks. These are just traders kind of doing stuff, right? But if the earnings are good, then I think what you're going to see over the next month, over the next quarter, is that the stock is going to continue to go up. All right, so let's take a look at my analysis document here and just get some additional breakdown on kind of how they're doing. So, I mean, look, Nvidia is a growth story. I've said it all along. Believing in this stock is believing that their growth story is going to continue to exceed expectations. And as of right now, it is. I mean, just look at these numbers. These are just insane growth numbers from a revenue, earnings per share, and free cash flow per share standpoint. I mean, this is just ridiculous. And now if we take a look at their business segments, especially for the last quarter here, what you can see here is that the US is by far the biggest part of their revenue. And actually, the US and Singapore together are more than half of their revenue. And the growth rates on those two are just astronomical right now. Now, one area that'll be interesting to watch is China, because it's up 34%, which is pretty decent growth. But then we know there's all these kind of geopolitical risks and potential tariffs or restrictions and all that. And so it'll be interesting to see if this number goes down or how much it impacts their revenue going forward based on just all the things that are happening in the world right now. And honestly, you could say the same thing about Taiwan here, but I think for Nvidia, the bigger risk around Taiwan is what it's going to mean for suppliers like TSM and how that impacts their business overall. And if we take a look at their business segments now, and I know everyone loves to pile on data center, like, oh, that's where all their revenue is. And well, yeah. And if you look at this graph, clearly it's all data center, and their growth rate in data center is ridiculous compared to kind of all the other ones. Although automotive had a nice little jump, but it's still such a minor part of their revenue that I don't know how significant that is, at least for now. But look, the data center growth is one of those things where I'm not in the camp that everyone else is of, oh, it's all within data center and that's a risk. Well, sure, of course it's a risk, but the growth in data center has been so astronomical that if we just look at this table, this growth is just ridiculous. Like if we go back a year to Q3 of last year, you have to remember with Nvidia, their fiscal year is like a year ahead. So now they're in 2025. So when it says Q3 2024, that was actually a year ago. But data center was at $14.5 billion, and now it's at $30 billion. I mean, within a year, they have doubled their revenue in that segment, which is just insane. And if you go back before that and you go to Q4 23, it was $3.6 billion. So what is that, like 8-9x over the past 20 months or so, which is just insane growth. And everyone says, well, it can't continue. Yeah, it probably can't continue at 8 to 9x over 20 months, but their growth is still strong. So let's talk through some of their results a little bit. We looked over their guidance for the most recent quarter already, but their outlook for next quarter is basically revenue of 37.5 billion. Oh, and I didn't put the B there, did I? Let me add that. And then gross margin lower down to about 73. And the reason for that, they said, is because as they ramp up for Blackwell, the gross margin is going to come down a little bit for a couple quarters, but they expect it to be back in the mid 70s, in 2 to 3 quarters later. Now, the first thing that I thought of when I read that was, oh yeah, these numbers for this quarter don't even include Blackwell, right? Which is their new product that everybody wants, that the demand's insane for. So, that again is another thing in the positive direction for Nvidia is, look, this was a really great quarter. It didn't even include Blackwell sales, and all that's going to start beginning next quarter. So when it comes to capital allocation, obviously Nvidia is a beast as it relates to like debt and just health on their balance sheet. Return on invested capital is just an insane number, and they've ramped up buybacks. Now, could they do dividends? Yeah, of course. I would probably argue that most Nvidia investors don't really care about dividends, so they're probably fine with them just doing share buybacks, even if it's at all-time high prices, because at the end of the day, if you believe the growth story is going to continue, then this isn't going to be the all-time high, right? So, I think this is a case where they just have so much cash that they have to do something with it, and that's what they're doing. I think that's okay. And of course, they even have another 46 billion authorized, so I don't think that's going to stop anytime soon. Now, we touched on profitability already, and what I like about this graph is that it's annual. So we've been talking really kind of specific quarter by quarter stuff for Nvidia, but when you look at the annual trends, they're very positive. So this is one of those things where, yes, there's going to be some temporary gross margin pressure as Blackwell ramps up, but overall, this is a very good story. All right, so let's talk about valuation. And valuation in Nvidia is always a fun topic because everybody says the same thing. They say, oh, they're so overpriced. They're priced to perfection. It's such a bubble. Overpriced big tech. I get that one all the time. But what I've been saying since I bought Nvidia in March is that if you account for the growth in your valuation metric, where you say, I'm going to look at the price to cash flow and then the cash flow growth, and I'm going to look at the price to earnings, but then the earnings growth. When you account for the growth, Nvidia looks extremely attractive, and that is shown here in these numbers. These are extremely attractive price to cash flow to growth and price to earnings to growth numbers. And that's because their growth rate has been outpacing the stock price for a long time. And people don't really understand this concept. And that's why I think some people are missing out, because they see a PE of 60 or of 70 and they're like, oh, it's so overpriced. But when the growth rate is 100% year over year, it's actually undervalued. So look, Nvidia is a very volatile stock. One of the reasons why I don't just go out and tell you guys, hey, go buy Nvidia at all-time highs is because it's very volatile and it's going to go up and down a lot, and it's going to have some crazy days that if you don't really have a lot of conviction, you may be like, why did I buy this, right? But if you just go by the numbers, you just go by the fundamentals, it looks extremely attractive, even though it's up 60, 70% already since I bought it in March. So, again, when it comes to valuation, we all have to do what we feel comfortable with, because at the end of the day, when the market does whatever the market does and you get these crazy up or down days, it's going to shake your confidence unless you really understand why you bought something. But when people tell you that Nvidia is way overpriced, my question is, what are they actually looking at? Because if you're only looking at PE, you're only looking at price to cash flow, and you're not accounting for the growth of the business, then in my opinion, you're doing it wrong. All right, but let's get to the brass tacks of the issue that investors have with Nvidia. And I touched on it earlier, but it's growth, right? So if you just look at the growth like this, it looks great. And let me actually take these off here. It's a little bit easier if we just look at it here. So what you're seeing here is revenue, and then the line is earnings per share growth, right? And it's just going up and to the right. This is a very strong graph. Now, when you look at the growth rate, and I'll start with revenue first. Actually, I'll take off earnings per share. When you look at revenue, you're like, oh, look at this. It's decelerating. And yes, it is decelerating. But it's decelerating to where now it's at 93%, which is still a really great growth rate. Earnings per share growth is telling the same story, right? Like, this is a clear deceleration of earnings per share, but it's a deceleration to 110% earnings per share growth, right? So, even though it's trading at like what, a 70 PE, the earnings per share growth is much higher than the multiple. And, at the end of the day, this is really the question you have to answer yourself. It's the same thing I said back in March. The whole story with Nvidia really boils down to a simple question. Do you think that their growth story is going to continue to exceed expectations or not? Now, for me, the answer is yes, at least for a while, and we'll see how long that while is. But I think it's at least a year, maybe 18 months, and then I'll kind of revisit and see where they're at. But that's something that we all have to ask for ourselves. But this really tells the story of, yes, it's decelerating, but it's at 100%, and it's a question of how far that's going to continue or how long it's going to continue at that level. All right, so let's take a look at the story that I have for Nvidia. This shouldn't really be news, something we've talked about a lot. They're a best-in-class provider for critical infrastructure related to AI. Their customers are the strongest and richest companies in the world. CUDA plus networking makes them more than just, quote, chips, and they're at the forefront of a secular shift in computing. Now, on the flip side, their customers are also formidable competition and highly motivated to be less dependent on Nvidia. Their founder and visionary led, which to me is a really good thing. And then lastly, premium valuation and high volatility. Now, let me clarify that. Premium valuation, if you just look at PE and price to cash flow, if you account for growth, then it doesn't really look like a, quote, premium valuation. However, there is a lot of risk with Nvidia because it is extremely volatile. There's a lot of people speculating on the price in terms of if it's going to go up or down. So what you get are these really big spikes or really big down days, which can be really tough to deal with unless you're very confident in why you bought it in the first place. Now, in terms of what I'm monitoring, overall revenue growth, which we talked about, the revenue growth rate is very good. It is technically decelerating, but it's still very high. Training versus inference trends as it relates to revenue mix. Now, we didn't really talk about this, but they've mentioned that inference is about 40% of their revenue mix right now, which in my opinion is very good. And this whole idea that, once people are done with training, then NVIDIA chips won't be needed. How they've talked about it before, how Jensen has talked about it before is that, look, you're going to have these data centers that have all these old H100s in them that they were used for training originally, but now they've upgraded to Blackwell and these other kind of newer architectures to do training. Well, they have all that stuff already sitting there, and they're likely to do inference with that after the fact. So time will tell on that. So gross margin trends, we talked about that. It's been a very good story, and they expect a little bit of a dip as Blackwell ramps up, but then back to the mid-70s, maybe in the second half of next year. Earnings and cash flow versus growth. Again, is the business continuing to outpace the stock price? And as of right now, the answer is a resounding yes. And then product pipeline and performance. So Blackwell and Rubin, and this is really just about, at the end of the day, their stuff has to do well and it has to be a really good product. And now that it's ramping up, now that it's rolling out, it needs to perform and people need to get what they expect out of it to kind of keep this whole story going. And then, of course, lastly, same with TSM, changes in U.S., Taiwan, China relations and restrictions. Obviously, Taiwan Semi is heavily impacted by this, which means that Nvidia is heavily impacted by this. So time will tell. It's something that I'll keep monitoring and we'll see how it goes. So in terms of overall thoughts, to me, Nvidia is just kind of humming along. We're still talking about how they're beating market expectations every quarter. We're still measuring them with quarter over quarter growth rates, which is just insane to me. So when you kind of account for the fact that Blackwell isn't even in these numbers this quarter, and that's coming for next quarter and kind of beyond into next year, to me, they're looking really good. Now, obviously, anything can happen, and it's one of those stocks where if anything kind of negative happens, it'll probably take a dive because of how much speculation there is on it. But I feel really good about Nvidia. Look, I added it just in March. Everyone thought it was the top. I didn't think it was the top. I made it my largest holding quickly thereafter, and I've kept it there. And it's rewarded my portfolio. It's probably the single biggest reason that I've been able to catch up to the index year to date, even though I had such a slow start. So, I feel good about Nvidia, and I'm excited to see what Blackwell means for next quarter and into 2025. All right, so let's talk about Cloudflare. Now, if we look at Cloudflare's guidance or what they guided for Q3 last quarter, they basically said they expected revenue of about $401 million and a operating income of about $57 million. This is non-GAAP because they're not profitable from a GAAP perspective yet. So if we look at what they actually reported, they reported revenue of $430 million and non-GAAP income from operations of $63.5 million. So they basically beat on both revenue and non-GAAP operating income, which is a good thing. And if we take a look at how it compared to market expectations, they beat on earnings per share and they beat on revenue both. And in terms of the market reaction, now this was probably about 2 weeks ago. So it was on November 7th, I think. So what you can see is they were probably around $91 when they had their earnings call, and they've been on this roller coaster ride up and down like every day. Like it's been ridiculous when I've looked at Cloudflare on a daily basis, like what the stock price is doing. It's been a wild ride. But since about a week ago, it's been pretty much up only and is now up over $100, which is just pretty insane. I mean, today alone, it's up almost 7.5%. And the crazy part is Cloudflare is now my third best performing stock when just a couple months ago, it was like one of my only negative holdings. So, this is one of those things where Cloudflare is a stock that a lot of people question in terms of why I added it. And I'm going to talk a little bit more about my thought process behind that here in a minute. But one of the reasons why I added it is because it is a smaller market cap stock. So it's less correlated with the broader market. And in my opinion, because I thought it was an interesting opportunity, when it does do well, it really helps my portfolio performance overall. So let's take a look at some of the details of Cloudflare's quarter. Now, in terms of revenue growth, they're growing at a pretty good clip, but it has been decelerating growth. And that's something that we talked about when I added it to my portfolio. That trend is continuing right now, but it's still at 30%, which is pretty decent. So it's not something that I'm too worried about at this moment, but it is something that I will keep watching. So we talked about the results for this quarter. And if we look at what they guided for next quarter, revenue at 451 to 452, which is a really narrow band. I don't know why they do it that way. Then operating income between 57 and 58 million. So there was one area in their latest quarterly results that had me a little bit concerned, and that's dollar-based net retention. Now, even though they say strong dollar-based net retention here, it's actually been going down, and this latest quarter is the lowest that it's been in over a year. So that's a little bit concerning, but when you understand Cloudflare's business model, it kind of makes sense because they tend to have a lot of smaller customers, right? They have this model where it's a freemium model. You get a lot of free users, and then you're converting people to paying customers, which means that you're dealing with a customer base that's like smaller dollar and less enterprise focused. And that's actually an area where they're trying to improve. And when you see their customer growth, they have a 19% compound annual growth rate in terms of paying customers, but they have a 37% compound annual growth rate for large customers. And those are customers that have more than 100K in terms of annual revenue with them. And if we just take a look at what percentage of their customer base it is today, you can see that it's really small. I mean, this is paying customers right here, and this is large customers right here. So the good news is this little small part is growing over time, but at the end of the day, it's still a fraction of their total paying customer base. And that's an area where I think Cloudflare needs to improve because enterprise customers are more likely to continue spending more over time as you keep meeting their needs and their business grows. So again, if we take a look at what's the story for Cloudflare, strong product, expanding TAM, multiple secular uptrends, which is a key point. Freemium business model helps for scale and customer acquisition, but I would say that it hurts a little bit when it comes to dollar-based net retention because you don't have as many of those enterprise customers. Strength in edge computing aligns with AI inference needs, and this is really the big part of my thesis with them. Developer focus can drive product features, competition will be insanely strong, and business fundamentals must improve over time. Now, in terms of what I'm monitoring, overall revenue growth. Now, overall revenue growth is still good. It's 30%, but it is decelerating and something to watch. Obviously, market share trends, which as we get to the beginning of the year, I think I'll take a look at that again. Developer platform growth, which I don't think they really talked about in this most recent quarter, but they talked about it in Q2 where they've seen some good growth there. Dollar-based net retention rate and paying customer growth we just talked about. So in terms of profitability, we actually skipped that, but it is inching up from the previous quarter. And at the end of the day, that's really going to drive a lot of their plan going forward. So if we look at their long-term operating model, you can see that where they're executing now is still a little bit under where they plan to be long-term. Operating margin and free cash flow margin, they want that to be 20% plus or about 25% in their long-term model. So that is part of the story with them, right? Is how do they get to profitability that's even better than it is today? And as that happens and as their customer base grows, then all the other fundamentals of the company should look better as well. Which brings us to the last part of what I'm monitoring, which is, their capital allocation trends, shareholder yield, just overall fundamentals of their operations. So Cloudflare is kind of doing what I expected them to do. Their revenue's still growing. They're kind of inching towards profitability. Now, in their most recent quarter, the guidance that they gave for the next quarter was a little bit below what the market expected. So the stock went way down kind of initially after earnings. But like I said earlier, it's one of those cases where overall they had a really good quarter. And what's happened in the next 2 weeks since then is the stock has pretty much gone only up. And so again, this isn't a stock where you're going to look at the fundamentals and say, oh man, this is such an undervalued gem. This is really a play on a secular trend related to cloud and AI. And they're one of those companies that I think can be a winner when it comes to edge computing, which I personally think is going to be a huge trend and a huge need going forward. So the combination of them being uniquely positioned to win in that area, as well as them constantly kind of expanding their total addressable market, is why I'm interested in Cloudflare overall. So it's more of kind of a broad sweeping vision investment as opposed to some really number crunching undervalued fundamental investment, if that makes sense. Now, obviously, only time will tell if any of that plays out the way that I expect, but at least so far, in terms of the stock price's performance, the markets agree. So just real quick, want to let you guys know that next week's videos are going to focus around product reviews of the investment platforms that I use. And that's because it's Black Friday week and they're going to have all their sales going on. So I'll be reviewing the 3 main investing tools that I use and that you see in all my videos. And that's Snowball Analytics, Seeking Alpha, but specifically the Alpha Picks feature because I did the premium review last year. And then of course, FinChat as well. So if you've been thinking about signing up for one of those platforms and you wanted a little bit more in-depth information, then get ready for those next week, check them out, and see if it makes sense for your situation. So what did you all think about Nvidia's earnings? Let me know down in the comments below. Now, if you want to watch my original analysis video on Cloudflare when I added it to my portfolio, then you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.